For more on tomorrow's Fed decision, let's bring in Evan Brown of UBS. He is the head of multi-asset strategy. Evan, great to see you again. What do you make of where we are in the markets right now, given the backdrop we just laid out?
Yeah, I mean, I think it's first of all, it's a strange economy right now. We're talking about that GDP is quite strong, but the labor market is soft, and we're waiting to see how that will evolve. But the soft labor market is what's getting the Fed to cut, and just history shows when the Fed is easing and the economy is holding up and earnings are strong, that's some of the best returns that you get in equities. And so I think it's kind of keep it simple. This is a good environment for stocks.
Evan, when does what level does the unemployment rate become problematic for the markets? Forget about the Fed because they're focused on it.
Yeah, I don't know that it's a particular level. It's the speed, right? And we still have a pretty low overall level of unemployment, 4.3%, we think, because we're not getting the data at this point. But if we start seeing the speed pick up, if we start seeing initial jobless claims spike, and we are at least getting the state level data there, and it doesn't look too concerning, then I think we're in okay shape.
Evan, today was a day when, in terms of asset allocation, you had equal weight to do nothing, in fact, be down. Most of the S&P was down today. And so we're at a place, just kind of curious how you're kind of advising across this big umbrella that you see and that you have to advise into. Is it to lean heavier into the stuff that's working? Is it to find some value in the relative value cases? There's been a healthcare resurgence. So how are you viewing this? And, as always, we talk about breadth or lack thereof, and it's easy to get concerned on a day like today. If you want to find that side, where do you sit?
Yeah, I think for the most part, we're leaning into what's working. I mean, I think there are some sectors where you're seeing the earnings and are not being rewarded to the same extent, like financials. We're overweight there, and we think we're going to get going again. But with the momentum that we're seeing in tech, I don't think you want to fight that. And we'll be getting a lot of earnings coming soon. We'll see how they come out, but it's looking pretty good on that front.
You are looking for other ways, though, to play the AI theme, and you're saying to look at China, which is interesting.
Yes, definitely. So, I mean, China's just, it's a lot cheaper way to play the theme, less crowded. But also, it's a different kind of approach to AI, where here in the U.S., we're trying to build the greatest model possible and reach superintelligence and all of this, whereas in China, it's whether it's by choice or just limitations in terms of not having the same access to the chips, they're focused on efficiency, and they're more focused on, okay, what are the immediate applications right here? And I think there's something to be said for that.
So going back to the jobs thing and the stock market performance, Derek Thompson, who has a great Substack, had a chart that he was saying the scariest chart in the world. So October 22, ChatGPT is launched, stock market's up 70% from there. Job openings are down 30%. Now, you don't have to say that's all because of GPT. This thing hasn't been useful probably for just until the last year or so. But how are you guys thinking about that? Because we're talking about these job cuts, you know what I mean? And eventually we're going to see a level of productivity because the tools are good enough. But right now, doesn't there seem to be a big divide between what the market is willing to suggest productivity is going to be and then this job opening situation?
It's very tricky. I mean, on an individual stock level, you hear these companies, they're doing layoffs, and people are saying, okay, that's good for margins, stock goes up. But if this keeps building up, clearly you're going to have a problem, and because that's going to hit the top line if enough people lose their jobs, and that's going to weigh on spending. And so we're just, we're not trying to predict. I don't think anyone can predict exactly what's going to happen here in terms of just how much productivity we're going to get. I do think that this is going to create, at some point, some meaningful public policy conversations of, okay, there are a lot of people who are out of work because of these AI tools. What are we going to do about it? Is there going to be talk about redistributing income? And, that time might actually come sooner than we expect, given what we're hearing right now.